Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we are going to take a look at Devon Energy out of the energy sector. It is March 15th. If you haven't joined the channel, go ahead and hit that subscribe button down below. Share with anyone you think might find value in the content. Here we cover dividend growth investing, portfolio updates of mine every Sunday morning, as well as the stock pick of the day series Monday through Thursday. So if you're into that kind of thing, like I said, hit that subscribe button, hit the notification bell, join me on this journey of financial freedom. We also have a Webull link down below if you use that link to start a brokerage account if you don't have one already. Throw some money in there. That is a way to help out the channel. You'll get some free stocks. I'll get some free stocks. So go ahead and get that free money and join up to Webull today. Actually, use that link down below. But let's take a look at Devon Energy. So if you want to know more about them, check them out, www.devonenergy.com. That is their homepage where I pulled this information from. Devon Energy Corporation is a leading independent oil and natural gas exploration and production company. Devon's operations are focused onshore in the United States. The company's portfolio of oil and gas properties provides stable, environmentally responsible production and a platform for future growth. Devon's fourth quarter 2021 daily production was approximately 300,000 barrels of oil, more than 150,000 barrels of natural gas liquids, and about 940 cubic feet of natural gas. Well, that's a couple years old. But they are headquartered in Oklahoma City. Devon is a Fortune 500 company and is included in the S&P 500 index. So if you're looking for an energy company in the S&P, this is one of them. They do trade under the New York Stock Exchange. And if you want to read the rest of this, go ahead and pause it. And you can read through this at your leisure. But their four main principles are proven and responsible operator, premier, sustainable portfolio of assets, superior execution, financial strength, and flexibility. Like I said, if you want to read more, go ahead and push pause and read through it at your leisure. Now, the reason we are taking a look at Devon Energy, ticker DVN, again out of the energy sector, they were down 8.29%, huge drop on the day. Anytime I see a big drop like that in a company, I'm going to get curious to what is going on. So I'm not sure exactly what was going on here, other than they hit their ex-dividend date yesterday. So not sure if there was some bad news or something like that, but might be worth investigating. But they were down 8.29% on the day, even with the banks dropping like they have. That's a huge drop. Especially for an energy company. Energy is doing quite well right now. Closed out the day at $45.14. Right, lost $4.08 on the day. Looks like they're even down a little bit further in the after hours when I pulled this information. 52-week range as low as $44.37, as high as $79.40. So they are right up against their 52-week low. Average volume 9.6 million. Today's was 21.7. A lot of selling it looks like today. Market cap of 29.522 billion, a beta of 2.36. Obviously, when you have drops like this, you're going to have high volatility in the stock. So they are twice as volatile as the overall market, at least right now. Price to earnings, PE ratio is $5.03. Earnings per share, EPS, is $8.98. That's actually very high. That's nice to see. And a low PE, very low PE here. 5 PE is very low. Forward dividend yield is $3.56. They do pay out quarterly. Actually, whenever we see that, we'll see that here in a minute. They have a strange payout, so I'm not sure exactly how to read this one. If anyone's a Devon Energy shareholder, let me know down in the comments. How did they pay out? It looks like they pay out on a schedule, but then they pay out some special dividends along the way. Looks like they do return a lot of capital, so I'm not sure if that 356 is just their regular dividend or if it includes a lot of these, what I see as special dividends, but we'll talk about that more here in a minute. And it says their dividend yield, same thing. I believe this may be impacted a little bit by how they pay out their dividends, but very nice dividend yield, 7.12% dividend yield, very high. Ex-dividend date is March 14th, so we just passed that. If you bought them now, you would not get the next dividend. You would have to wait for the following. And according to Yahoo Finance, where I pulled this information, they have a one-year target estimate of $69.28 per share. So speaks to some serious potential upside on this one as far as stock price goes. Now, I did snip a couple other things out of this. Whenever I talk to you guys, typically I say, hey, you want to get in here and look at their statistics. You want to look at the financials. Some of the things, whenever I click, and if you go to Yahoo Finance and you click on these, you'll be able to see a lot more data than when I click. But some of the things I look at, for example, the statistics. I've talked about it before, dividend yield theory. Basically, you can look at like the 5-year average here. It's telling you their 5-year average dividend yield is 3.04. Obviously, their forward dividend yield, or their current dividend, is 7.12%. So dividend yield theory says if you look at like their 5-year average and currently it's higher, the dividend yield, which it is 7.12, is higher, that speaks to undervaluation, right? If it was lower, if let's say the 5-year average was 3.04 and it was a 2 or 2.4 or 1.8, then it would be overvalued, right? So if you're looking at this, just to get a quick kind of reference on whether or not the stock is currently undervalued, you can look at you go into the statistics, go down to dividends and splits, look at the 5-year average dividend yield. The 5-year average is 3.04. Is the dividend yield higher? If it's higher, then it speaks to potential undervalued, right? So this currently, based on the 5-year average dividend yield, is undervalued, right? And then it gives you some other information, right? Trailing dividend yield was 10.5, so it is dropped a little bit. But again, this dividend yield is all over the place, so this is not one I would probably use that. I just wanted to speak to that. Another one, if you go into financials, which I always would go into the financials as well, a lot of information in there. But one of the things I look at in the financials is free cash flow and repurchase of capital stock. So are they diluting you as a shareholder? This company is not. They're buying back their stock, right? So they're repurchasing stock over time, and their free cash flow is growing. You want growing free cash flow. So over time, right? These are different years. I believe it starts back in 2019 or 2020, 130 million, 193 million, add 3 zeros to these, 193 million, 2.8 billion, 3.4 billion. This would be current year. So you can see how they're growing their free cash flow over time, and their dividends are paid out of free cash flow. So you want to make sure that their payout ratio, we'll see that here in a minute as well, is enough so that they can cover the dividend easily. But free cash flow is what you want to see growing over time, because that's what they pay the dividend out of. All right, so that's from Yahoo Finance. I'm not affiliated, just one of the sites I like to go to, but always check out all of the statistics and the financials of the company so you can understand more about it. And I always recommend more than one source. So another source that I like to go to is stockanalysis.com. I am not affiliated with them either, but similarly, you could go in the statistics, look at their financials. And this is a nice chart to give you an idea of what the analysts, 35 stock analysts, have taken a look at this. They call it a consensus buy. They have a low estimate of $59.59. It's currently lower than their lowest estimate. So that would be, if it comes back up, that would be a 32.69% increase in the stock price. To hit their average $73.25, that would be a 63.10% increase. And if it hit their high $93.45, that would be a 108.08% increase in the stock price. All the while you could collect that 7% dividend yield. But then another one I wanted to clip out. Whenever I go into their statistics on this page, one of the things I like to look at is return on equity, return on invested capital. So their ROE and their ROIC. Very high here. Return on equity, 58.10%. I mean, anything over 10%, in my opinion, is really nice. So this is very high. And return on invested capital. Again, anything over 10% is good in my opinion. This is 34.7%. So they are doing a very good job of the money they are reinvesting back into the company here, right? So very nice to see very high numbers on that. Now, this last one was what I was talking about. Their dividends it looks like they are on a March, June, September, December timeline. But if you see, going all the way back to 2021, I pulled this data up, they paid out 2 dividends. So one of these is a normal dividend. I'm assuming it's the 19 and 23 cents. And then this 11 cents must have been a special dividend. They did the same thing in 2021 in September. Regular dividend, I'm assuming, special dividend, or maybe 11 cents is the regular. Yeah, maybe 11 cents was the regular dividend. And then these other ones are special dividends. Usually when you see them double up in a month, this did the same thing in December. One of them is a special dividend. 2022, they did the same thing September and December last year. So it looks like they are paying out a regular dividend as well as a special dividend, which sometimes impacts like the dividend growth. I don't believe that they are actually growing at 162%, but it looks like it because of these special dividends. So this is one you'd really want to do a little bit more research on how fast they're growing, but they obviously are returning a lot of capital in the form of dividends to investors, this company. And it shows they only have a 56.5% payout. So their payout is still low enough, and maybe that's why they're doing these special dividends, where they can either give you these special dividends or increase the payout over time. So very nice to see an energy company like this taking their free cash flow. Not only are they reinvesting it back into the company, making a very high return on invested capital, ROIC, and a return on equity, but they are also returning a lot of capital to the investor. Very nice to see. This is one that I would definitely put on the watch list if I were you, and it does not look like it is in a bad buying spot right now. So if you are looking to add an energy company, this might be one that I would really seriously consider. But don't take my word for it. You do your own investigation, see if it's something that fits your portfolio. But it looks like one that is fairly valued at the moment and has a very nice dividend yield, very nice return on invested capital, very low PE, returning a lot of capital to the investor. Well, these are quick hitters. That one was a little longer than I normally like them. I like to keep them under 10 minutes, but I wanted to pull a little bit more information on this one because I did do a little bit more research on this one. So I thought I'd share that with you, what I look for in some of those other tabs on those sites. I know I speak about them all the time, but I don't necessarily get into the details. And again, it's in the attempt to try to keep these as short as possible and give you information on stocks that I see that may be coming into fair value and find value in this market. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel and drop a comment down below. Let me know what you think of Devon Energy, what you think of the videos. I do read and respond to the comments on the day that I post the videos. So some of you I know are responding to videos that are older. I'm still trying to respond to those, but I do have a day job. I do not make any money on YouTube. You could help me out with that by subscribing to the channel, dropping a comment down below, and sharing with people, or use that Webull link. If you don't have a brokerage account, go ahead and sign up. You'll get some free stocks. I'll get some free stocks. And with that said, this is Shane signing out, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in an investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.